Welcome to Relative Edge. This is the Sunday night live edition, 6 p.m. as always. The futures market are officially opening and the world is holding on to its breath. While the mainstream media is obsessing over the Dow hitting 50K, we're watching something much more dangerous. We're seeing bond yields spike during war. That's a massive vote no for the U.S. debt. Tonight, we're breaking down the petrodollar, and while the old safe haven rules are dead, but we have to start with the broad market structure. I got Rich here with me tonight. He's going to be analyzing the S&P 500 and other charts relative to Bitcoin and looking at the price action there. And we're going to get into it. How you doing, Rich?
Oh, great. It's a great day. And I'm excited about the markets and looking to jump into this and giving the audience the relative edge.
Yes, sir. Yes, sir. So first thing I'm seeing at market open, we gapped up on interest rates. So interest rates are going up. So usually when there's conflict, we see interest rates go down as people look for bonds for a flight to safety. Something else we're seeing here, which is interesting, is we're seeing the dollar. And let me share my screen, Rich, so you can see what I share. So we're seeing the interest rates jump up a little bit. We're seeing the dollar pop here too. Look at that move on the dollar, Rich. Can you see this?
Yep.
See gap up on the dollar.
Yep.
What are we seeing with crude oil? Oh my God, that's an insane move on crude oil. 14% up. Jeez, that's crazy.
Yeah, I told you.
Insane. That's insane. We're seeing gold pull back a little bit, down 0.21%. So right now, oil looks like it's taking the lead. Let's check out the S&P 500. S&P 500 down 1.5%. Oh my God, we're seeing drops from major support. We're hanging off the edge of a cliff here on the SPY. This is not looking good. I want to get Rich in. I want to get his feedback. I want to see what he's seeing. Rich, I'm gonna let you take it over, share the screen here, and
Okay, sure.
I want to see your thoughts here because this is crazy what's going on.
Yeah. This is something else
Wow.
that's going on right here.
Oil bill
Um,
even more. 106
yeah.
six is up 16%. Oh my God. Wow, look.
That is insane.
All right, all right. I got you up here so you can start sharing your screen.
See that?
All right. No worries.
Yeah, so you see with the SPY, that's a couple of things that's happening last week. We see a gap fill on March 3rd, which was here. SPY is actually rolling over and it's causing a particular pattern. When it's this is what you call a rising wedge. And when you hit what you see here, all-time high, and it's rolling over. So you connect the lower part where there's support, and as you see the rising trend, and it's getting narrower and narrower. So so from the lowest part to the top of this rising wedge, drew a line, and from where it broke down out of this wedge, I drew an it's an equal line from here to here, from here to down here, which is a measured move, which is interesting. A couple of things on the way down, because here's where we end off from the last trading day. Below us we have a gap to fill. Gaps usually fill, and in addition to a support and resistance level, which is at the bottom of this rising wedge. And if you look left, you're going to see it has more support point of control areas too also. Now this measured move comes down to where we left off is 672.38, and I have a measured move of 647.93.
Mhm.
So if you I'm going to pull, and also you see as the SPY was going up, the relative strength index RSI, which shows the strength of the buys and sells, it's is it's going divergence. Instead of going up like a market, it's going down. So the strength of the buying is going down. So looking at this measured move at 642.93, what you want to do also is to always look left. And if I pull this chart to the left, you're going to see where you have resistance that turned support, and it's support and control area right here.
Yeah,
There's always a reference there too also. Yeah.
yes.
And yeah, okay.
Yeah, I was just gonna say wherever there was price resistance in the past, when price goes up, is there's a good chance that if it consolidated there for a while after its move up, it may come back and test that level, which is what we're seeing. It at least it's coming towards that. So the question is how far it's gonna fall before it is able to catch support, you know? So 642, I wouldn't I'd say like that might be a level to watch for sure. Like you just circled what three different resistance what 65, 651.
Yep.
Yeah.
That's right. Or it's right down. So it could bounce there first, because it's not nothing goes straight up or straight down. So you can see a bounce there first, and then eventually come down. This can take days or maybe a week. But eventually, because of what's happening right now, interest rates up, yields are up. Risk off markets go down. And speaking of risk off, and doing a comparison with the overall Bitcoin market, and compared BTC and SPY, and did a chart with that. This is a monthly chart of the BTC SPY. So the first part, when you do pairs, when you compare it to another financial instrument, the front part, think of it as you're going along, and after the fourth of the forward slash, you're going short. So really, as you see, there were a couple of instances going from right to left. As you can see, you see an upper trend in divergence to the R side of the bottom. The bearish diverges, and you see a rollover too also. So being that BTC, which is Bitcoin, is still a new product compared to the S&P 500, which we call the SPY. SPY is 69 years old compared to the Bitcoin, which is only 17 years old. And during this time in its cycle with Bitcoin, you will see the last couple of cycles. Um, it's the bull market ends at in and around October. This one is actually October, and where you can see this uptrend is actually broken to also in October. This is the cyclical cycle that you see all-time high, which happened in October 2025 last year, and you see it also in the last cycle 4 years prior to that, 2021, which is the end of the bull market there, and you can see it trending downwards. So also, it's as you go back further, I did one in 2017. Within a few months, it eventually went into the bear market now for Bitcoin. So risk off, especially with, as Gerard was saying, yields up, interest rates up. That puts pressure on the market, and being that it's fairly new compared to S&P 500, risk off. They're gonna take off more BTC. So I'm looking forward to um the bull market for BTC. Here's a couple of things that you can do. One, you can wait for it to be over. Usually the bear market lasts 364 days. We're at day 128. So it's guesstimated about this October. The bull market should be back on and the bear market off. So in between that time, if you choose to, you can dollar cost average in lightly and make the most of your investment with Bitcoin. And yeah.
Yeah, and one thing I want to add there, and I wonder what that trend line looks like you see in the RSI, if you were to connect all those lows to get like an idea of maybe where Bitcoin versus SPY might bottom out. Because it looks like the lows may be getting lower here. So yeah, I'm very curious to see what happens with Bitcoin with it being a newer asset, in addition to the fact that we just broke a massive trend line. So if you're a holder of crypto, guys, definitely be careful. I wouldn't be surprised to see a retest, but right now we're in uncharted territory. Literally, we've never gone below that support on the BTC SPY pair chart. So that's an alarm signal for Bitcoin holders.
Yeah, absolutely. And it's something that happens with Bitcoin. Um
All right, so let's hop into the pair charts here. And one thing I wanted to talk about. Um, so yeah, Rich was talking about basically the SPY level and how basically there's a lot of gravity that might take over. And at the end of the day, it's a structural reality. Usually in a conflict, yields fall as people buy bonds for safety. But this week they spiked. So you can see here, so yields are going up. So what usually happens in this scenario is not happening, which is a bit odd. Um, this tells us that safety has been redefined since the US has weaponized the dollar, especially in 2022 against Russia, seizing their assets. The BRICS nations have been heading for the exit. When you see yields rise in a crisis, you're seeing the global populace exit from US debt. We are moving from a world of return on capital to return of capital. So value is being repriced and money is flowing outside of conventional assets. So we also need to break down the petrodollar and its connection to oil, because after the US came off of the gold standard in the Bretton Woods in the 1970s, the US needed to tie its currency to another asset that has value so that it can be a um, stable dollar. And what we tied it to was oil. So basically, the dollar and oil have been moving more or less. There's been a more correlation between the dollar and oil, which I want to check out right now and show you guys what I'm seeing with the dollar and oil. So this is the DXY versus oil here. Um, and let's go to the monthly chart here, right? Yeah, so look at this. I mean, for usually there's a really tight range for a long period of time. And for since 2020, March 2020, um, the dollar has lost tremendously towards oil. Typically in the last, since what I guess 2015, if I draw something like this, like a horizontal line, more or less we've been trading within this range. But now we're seeing a little something different here. and Rich is back. So let me share my screen again so you can. Rich, can you see my screen?
Oh, yeah.
Okay. Yeah. So I'm just looking at the dollar versus oil or USO, and drawing some support lines to see what the range might look like here. But we're seeing a clear drop in this range that we were stuck in since May 2022, I guess January 2022. And for since the last 4 years, we've been in this range. The dollar has been pretty tied to oil's price. But now we're seeing the dollar break down versus oil. And we're seeing rates rise. So basically, the petrodollar may be redefining itself. Maybe it will just be the dollar and petro, and not the petrodollar, because as nations settle on oil current in local currencies, the demand for the dollar shifts. And if the dollar fails to rise while oil gaps up upon war news, the petrodollar is officially over. This is why my portfolio is kind of weighted more towards oil right now. And look at this. I mean, if you're seeing the dollar up in this right hand corner, even today on the gap up, you see this is the day. We're up at highs, but look at where oil is at. Look at where oil has gapped up to. So that's a matter on crude oil. And we're not seeing the same level move in the dollar. And while we're seeing rates go up. So that's telling me that the petrodollar, the dollar is not no longer going to be linked to oil. And we're going to see oil and commodity prices um, take relevance and take control over these markets. So I want to kind of dive a little bit into what we're seeing with the Dow Gold ratio here, because
Yeah.
we're seeing the Dow
Well,
go off here.
yeah, while you bring that up, you can see with like gold and silver, they're taking the hits where everybody's piling into the favorite right now, which is oil.
Yes, exactly, yeah. So yeah, I mean, let's look to the daily chart here. Basically, more or less today, actually the Dow is outperforming gold slightly by 0.42. Now it looks like we're breaking down here. I want to see, we're likely going to test this level, the 9 level, meaning you can get, for every one Dow Jones, it takes 9 Dow Jones to equal 1 ounce of gold, basically, or vice versa, 9 ounces of gold to equal 1 Dow Jones. So I want to see what happens this week if we come back and test this support and break, or if we bounce back and hit resistance. So that's going to be something we keep an eye on here. Next, I'm going to move to the gold silver ratio, because you guys know I love silver, and see how that's being affected today. So yeah, last week, um, we saw the the gold silver ratio kind of consolidate. And typically this is the flow of risk off in terms of precious metals. It goes the Dow gold, then gold to silver, then silver to silver miners. And right now we're seeing the lens flip a little bit this last week, and now money is moving away from the miners, away from silver, and more into gold, and I guess from gold to oil. So, and we can see that by the dollar getting above the gold silver ratio on the RSI daily getting above 50 here. So we closed above 50 after seeing this bearish divergence. So now we've broken out of the bearish divergence. So what's likely to happen is one of two things. The price action of the gold silver ratio to test the 65 level where we got rejected from previously, or break down back past this 50. And if we break down past this 50, that means we're going to test the whole reverse. So gonna keep an eye on this RSI here to see if money is flowing into gold, into silver, into miners, or if it's flowing from miners into silver, into gold, into oil. So
Yeah, because what you want to do is look at the trend line because the gold slash silver ratio right now, silver is picking up steam over gold. However, um, However, you want to see trend breaks, like overall trend breaks and intermediate trend breaks
Yeah.
too also.
Yeah, so
Yeah.
this is something I'm gonna watch to this week. I'm gonna see, hey, do we test this 56 level or we test the 65 level here? That's gonna be key this week. So there's no call this week fully on what's the clear mover, but I might be watching this ratio to see if we break down further. Um, the next one is gonna be silver versus silver miners, and I like to look at the junior miners, so we're gonna look at silver versus silver miners, and I do still like this chart right here. I'll tell you why. Because we were previously trending in this upward trend channel. We broke out, formed a bull flag. This is a bull flag right here where the bottoms are making higher highs and the tops are making lower lows, converging to an apex and then shooting up. And then you want to see for a continuation of the pattern for the price to come back and test the upward trend line once more by and then following through with another close above the wick of the previous high. So that's all we got here, and we saw a kind of move higher, but that move higher was a fake out and negated by that RSI bearish divergence. So it's very key here. So now we saw a strong move down, and look at what we were seeing here. We were seeing price converge in a bearish flag, but now on the opposite side of this, we see price expanding in a megaphone pattern. And as you guys know, a megaphone pattern, if you don't know this, if you look up megaphone pattern, it's a bearish consolidation pattern. So what we want to see here for this trend to continue is for silver miners to start outperforming silver and to break down. So my guess this week is that, well, I'm going to be watching this level. If we can't get above this trend line, which it looks like we're already struggling with, we opened above and now we're lower. So we're going to watch this. I'm expecting the silver miners to still outperform. So by next week, this time, I want to see a large move down here. That would mean silver miners move up fast, but it's key to watch this upward trend. If we see a couple candles, if we see a break above and we come back down and test this, so a red candle that closes in this upward channel, then bets are off. So it's important to look at the bear case and the bull case. I don't want to get married to one thesis because that's how you end up holding the bag. So
That's right.
I'm going to be watching this week to see how silver miners perform versus silver. Um, and last week my call was basically to look at AG versus USO. Um, AG is First Majestic Silver Miners, is a Mexican silver miner. It's one of the highest beta plays. If you're looking and you're thinking that silver is going to outperform and you want to add some leverage to that, AG is a good option. And so AG was one of the outperforming silver miners, and I wanted to compare its price action towards oil because I saw geopolitical tensions rising and it looked like there was some bearish divergences on the chart. So I wanted to dive a little bit more deep into that. So last week I called that USO was going to outperform AG. After looking at this week, USO outperformed AG by almost 40%. I'm not going to lie. I did not think it was going to be that big of a drop in the course of literally 1 week, but that's a massive drop in that pair chart. So, if
Yeah.
you took that advice or not financial advice, but if you were to get into that trade, which I was in early in the week, you would have made some money on AG. I took profits on AG Monday and Tuesday, and I missed the rest of the run. But I mean, I got in, got out. There's nothing wrong with taking profits. I still made some money, but dude, it's hard taking profits and watching it drive up. But I mean, you got to be disciplined, you know. Um,
Right.
so yeah, so AG right now, it's looking like after it fell down this week, On the RSI on the weekly chart, we're still above the 50, so AG is still more bullish over USO in the like longer term charts. I mean, I still am skeptical about trading this. I'm not gonna give any calls because that was such a fast move, and I don't even know what is gonna happen this week. I can't act like I will buy. I do want to look at these charts because look at that move down. I mean, if you were holding AG last week over USO, you got slammed. And if you were holding USO, that's a massive move down. So, I mean, we were showing support.
If you're holding, wait, so repeat that again. If you was holding USO, you would be,
You'd be up big.
yeah, okay,
Okay. Yeah. So, AG, I think USO went up, like almost 30% last week.
35%.
Yeah. So
Yeah,
big
yeah,
move if you were holding USO last week. Uh,
yeah.
so, I mean, yeah, this was previous. We're coming close to previous, support, or previous resistance. So here we showed a cup and handle pattern, right? And we broke through, and then we came back and tested it. And then not only did we test, we formed another small cup and handle above this base, and we pushed off. But now we've broken this upward trend line, so we're likely to maybe come back and retest this second breakout, on a downswing, or the next level on the downside is this 0.226 level. So I'm gonna be watching this closely. Um, but yeah, I mean, oil had the best year since the 70s, a best week since the 70s last week. Like that was an insane move. Anyone watching that and everyone looking at it now, like this is some crazy stuff that's going on. It doesn't look like this. Um, it doesn't look like this war is getting better right now. It seems to be escalating, which is sad to see. But we have to make sure we're monitoring our position size, and making sure we're adjusting pretty quickly. Because I mean, you can look over here at the VIX and see in the bottom left-hand corner, like the VIX is starting to move up. And let me clean up this chart a little bit so it's not so dirty. But the VIX is just closed at a new high on the daily chart. So expect some potential pain this week. We're seeing interest rates rise, the dollar rise. That's really bad for the markets. The markets like a weak dollar because it means that there's higher imports. It's easier for other countries to buy our product, and markets like lower interest rates because it's easier money. People can borrow money at a lower rate, so it increases demands and buying power. So when the opposite of those twos happen, you see what's going on in the market, where we're seeing in the bottom right hand panel, um, the stock market take a dip. So it's important to understand how the 10-year yield and the dollar affect markets, and especially looking at the VIX to see, hey, this might not be the best time to be holding risk assets, Bitcoin, the stock market. If you want to be holding these things, what you want to see is interest rates continue to come down and the dollar to come down as well, and the VIX to come down. So until those,
Yeah, also, yeah, also keep in mind that we may have a repeat of last year. We had quite a crash. Well, I shouldn't say crash, quite a dip in April in the S&P 500 last year. Well, actually, all the markets, hit quite a dip, at a low in April and return and go to the upside. So and it takes a little while for large institutions. Institutions are the ones that move the market, institutional buyers. So it takes them a little while to scale out and even scale back in to also. So with that market move, yeah. So and as I mentioned before with our Bitcoin, you, and it just SPY, they did exactly the same thing, risk off. And yeah, we're looking at lower possible the way how things are going with geopolitical war, things going on. We're gonna have we I'm anticipating the same that we had last year, going to a dip. all the way to April and reevaluate.
Yeah, yeah, definitely. Kind of want to be more patient here and wait till the market to kind of make its move. Right now, it looks like there may be some selling. It looks like everything's selling off except for oil. I want to actually check that one more time while we're still here. See what's going
Yeah,
on. Because like,
and just so the audience know, oil is only bought in US dollars, no other currency.
exactly,
So people, as you see the dollar going up, is because people are buying dollars.
to buy oil. Exactly.
Yeah.
So,
To buy oil.
so it's basically an inherent demand that the dollar has, which is why we call it the petrodollar because of its link to oil. Because so basically, uh, when there was a Bretton Woods agreement and they unlinked gold from the dollar needed something else to be linked to so that it maintains its value. So
Mhm.
Saudi Arabia has a surplus of oil reserves, and the U.S. made an agreement to basically deal with dollars every time we're transferring, selling, and buying oil in protections and in for trade. Basically, the U.S. would protect Saudi Arabia and the oil producers in the area. But I mean, it's kind of looking at geopolitical stuff. It looks like the U.S. is more concerned with other countries, helping other countries. They're right now they're assisting Israel with the war with Iran. So and Iran is attacking other countries. So other countries are questioning that agreement that they made in the 70s and 80s to keep using dollars to trade with oil. And you can see that because we're seeing a massive move up in oil. And still, even off the open, the dollar wasn't able to make new highs. Yes, it is at the high right now. But I mean, even if you look at, if we make a high here, it might be a bearish divergence. So we want to keep an eye on the dollar, kind of see how that continues to move. We want to look at the dollar oil pair chart that we were looking at earlier, dollar USO, and kind of see and kind of see where that moves. But yeah, some things to keep in mind for this week. Um, just be careful. Sometimes it's best to not trade on weeks like this, and if you are, keep your stop losses tight. Um, kind of wait it out. But I know one thing is um, war is typically good for commodities. So I still believe that this will move gold and silver up. The question is when, and being patient, waiting for dips because we may see more selling in the short term, followed by buying. So if you've been waiting to get a good price, get in at a good price for gold and silver, a new opportunity may be coming up if we get lucky. Um, but right now, as of now, even with this opening up in the red, we're only down 0.5% on gold, which is really nothing. And it's pulling back upwards. So there's been no real trend change, even with the dollar's opening strength. So that leads me to believe that um, we may see these assets turn around quickly. So I'd say if we get any dips, I I'm not financial advice, obviously, but look for buying opportunities in the coming week for sure.
Yeah. I would say gold and silver is going to continue to consolidate until these geopolitical war tensions are over, which affects the oil. Because right now, it, I see that um, the way out to look at things is oil over the dollar as a barometer right now, because the flight right now is to oil, and you can see it in the charts. Because immediately as oil spiked, as the markets opened, silver and gold, they trended downwards. Not a lot. It's not a lot. You can continue to hold it because the geopo oil the only reason why oil is spiking right now is because of the geopolitical tensions and closing down the supply and cutting off the supply. Or of course, demand on oil is consistent. So when you cut supply in oil, the price is going to go up. So until that resolves itself, I believe we're going to see at least bare minimum consolidation with other commodities like gold, silver, platinum, copper, and such. So it's a good hold, for the long term. But this oil is a flight to profits, increased profits with these companies. And speaking to what you was saying before, Jabari, about the interest rates um, going going up, and it's more expensive for people to borrow money. Keep in mind that companies, they actually need these interest rates to come down to actually do two things. One, pay back the loans because if interest rates goes up, they pay back more. Um, and two, to borrow money to stay afloat in
Mhm.
their companies. That's why you will see, as you saw the other day, um, jobless claims increased.
Yeah.
To more expensive because people are laying off people. Companies are laying off individuals. They need to do that to satisfy their stockholders,
Exactly.
to keep the value. Um, so and then on their next earnings, when they report earnings, the revenue should be more, and or at least not lose on revenue because they're paying less employees. They're keeping more capital, so they have to have a balance with that. So those are a few things that I was thinking about as you were speaking. For
Yeah. Yeah. Very important. So, just some things to watch this week. Keep your eyes glued to the debt market. If we see these interest rates go higher, specifically right now, the next level is around 4.2. If we get above 4.3 in the 10-year yield, the markets are gonna puke themselves. So keep that in mind. There's this, like I mentioned on the first video, we had this bull flat. Well, we had this pennant. Basically, we broke down. We trended inside of it, broke below, um, broke below, and now it looks like we're coming back to test that downward trend line. So, um, what I'm thinking, and just based on look, oh wow, look what I just saw. Maybe this might be something to look at. I'm gonna redraw this line as a channel, and maybe get a channel there on with that on the 10-year yield. So yeah, the 10-year yield's in that downward channel right now. I want to see it test potentially this upward channel. I want to see what happens when we get to 4.3, and how that affects markets and yeah. But it's key to look at all three. You can't just look at one picture. Look at the 10-year yield, look at the dollar, look at oil, look at gold, look at the stock market. Looking at one can be confusing, but looking at them in relationship to other tells you a different story. So yeah.
Yeah, and consumer wise, um, oil is in a lot of things, a lot. So you're talking, of course, gasoline. You're gonna see gasoline prices shoot up. Um, Even in plastics, anything plastic has oil in it, that's gonna be more expensive. So even in plastic bottles, so you might see your bottled water go up, because they use plastic bottles. So um, yeah.
Yeah. So expected living costs, food prices, pretty much needs to go up in price. You guys, I know you guys that have a car noticed that the gas pump this week. We saw gas prices definitely go up this week, and I expect them to move higher if this conflict doesn't resolve itself
Yeah.
soon.
Yeah. It's time to get your steps in.
Yeah, yeah. Whip out the
You,
bike.
you
Step
step in,
start
you
biking
ride
to
the
work.
bike, you know, get your
Just
steps in to also.
get your soya milk cars ready.
Right.
That's
That's right.
yeah. So yeah, but that's pretty much all I have for this week. Uh, it's always a blessing coming here and being able to share my knowledge, share the stuff I learn, and have a platform to do it. And I appreciate people that come and support the channel. And hopefully you learn something from what we said, and it helps you with your day. And yeah, I would like if you could like and share the video. That would be very helpful. And yeah, I'm gonna be out here next week to share more of our thoughts, and I'm gonna post some reels during the week. So I'm looking forward to seeing your feedback.
Yeah. Yeah. Look forward to your comments, questions. We'll definitely get back to you if you have any questions, something to clarify, questions that you have. Um, yeah, we'll be happy to oblige. All right.
All right, guys. See you guys next week. Have a good one.
All right. Take care.
Bye.